Hello, everyone, and welcome to Good Morning Trading. I'm delighted to see you again. We're going to review the latest market news. My name is Benoist Rousseau. I've been trading for over 30 years, and I'm a member of the CME and the Chicago CBOT. These are the two most important futures exchanges in the world. Today is a very special day. It is FOMC Day, a day of intense excitement, a day of extreme risk, a day of massive volatility, and a day of heavy losses. It is a day of bitter tears for all the inexperienced beginners who are drawn to the bright light like moths to a flickering flame, unaware of the danger ahead, and generally they end up getting burned. We're going to see extreme volatility. This is not the time to take out your paddle boat when a hurricane is being announced. All the pro traders are heading back to port. They're having a drink, watching the beginners on their paddle boats heading straight into the eye of the storm, thinking to themselves, there go more casualties. Today, it's not for lack of warning. You're not going to change your life in a single day. Just because there's a lot of activity doesn't mean you should be drawn to it. On the contrary, it should push you away. It's very negative. Even I, with 30 years of experience, only take risks on FOMC days when there's an announcement. The announcement will be at 8 o'clock p.m. French time and 8:30 p.m. The FOMC president's speech, it's during the speech that things start to move. Otherwise, it's just not possible. We're in casino mode, so just to give you an idea, I do trade a little sometimes, but my position sizes are divided by 30. That tells you something. I'm basically in demo mode just for fun, so I can take a trade on a major support level I've identified. If eventually we go and hit it, I only do that if I'm ready to lose money. Because Monday and Tuesday went well, the month was good, I was able to recover the money, so be extremely careful. There you go, you're adults, you're not teenagers who need to prove they've got testosterone, and that's fine. We've still evolved since prehistoric man. Although in the end I doubt it, your land, mine, or else I'll throw stones at you, or else I want you. I'll send my planes at you, or I'll send my aircraft carrier, or else I'll send a nuclear missile right at your face. Well, basically, we've just gone from throwing stones to launching atomic missiles. I'm not really sure that in 50,000 years humans have actually evolved, but what's important is to have hope that we will evolve and improve little by little. We did abolish slavery after all. Well, we also created wage labor at the same time. Yeah, well, that's another economic debate now. All right, with that, let's take a look at the technical analyses of the different indices. And there's a little surprise. It's PEA, a staggering surge, even before we get the FOMC results, even before Tesla announces its results. We're seeing a huge surge. On the indices, especially on the Nasdaq, we're at the yearly high. It's breaking out everywhere. Nothing is able to resist it. Now we know above 26,000. You left it above 26,000 before going to bed. Well, now it's at 26,300. Pushed. As if they're anticipating not a revolution from the FOMC, but results that beat expectations, for example, for Tesla, or better than expected results for Meta. The launch of Facebook and Instagram at sea. So there you have it. You can really feel a sense of excitement in the market right now. But only on the Nasdaq. So, sorry, regarding the FOMC, we'll get to them. Of course. Done. The wedge head to CM Group. Well, it's not because I'm a member that I'm showing you this. I don't get anything at all for showing you. But it's really the main indicator to see what investors are expecting regarding interest rate changes. What's very interesting is that we can see the trend. Currently, 97.2% of investors think that rates will remain stable. That's something you always need to know in advance. Why? Because what's expected is stable rates. If the Fed president announces stable rates, even then, things will move a lot. If we go outside this range, let's imagine he raises the rates, then it's the apocalypse. We're heading straight south. And if he lowers the rates while everyone is expecting stability, we're going to see a big jump up. What I really like is looking at the changes over a month, a week, or even the day before. So we can see that a month ago, almost 1 in 5 investors thought that rates would go down. Now it's down to just 2.8%. You can see how in just 1 month the market's outlook has shifted. Here we see a bit of resistance, let's say, from the Fed chairman against the pressures from Donald Trump, who would love to have rates at about, well, what would be about right, maybe minus 8%, to create the most extraordinary real estate boom in human history, but also hyperinflation. I'm joking, I'm exaggerating, but you see, if money is in quotes free for investment, you borrow, you create a ton of jobs, but it also leads to monstrous inflation. Monstrous inflation actually destroys people who are locked into their assets. For example, those who are tied up for 10, 20, or 30 years because of a real estate purchase. They see the value of their house theoretically go up. The only thing they don't realize is that if they sell their house, they've made a lot of money. Congratulations. But unless you want to live in a tent and end up a millionaire homeless person, which isn't exactly appealing, the problem is that all the houses around you have also gone up in value. So actually, when you buy a house, no matter how prices change, even if they crash, drop sharply, or rise sharply, you don't gain anything. You just stabilize with a property of the same quality for the coming years. If prices go up for 20 years, then all properties of the same quality as yours will also go up for 20 years. So you'll end up trading a 5-room place for a 1.5-room place. In fact, that's it. There's no improvement at that level. So there you have it. The Fed wedge index tells us it should remain stable. Still, sometimes we wonder if there aren't leaks or something like that. But on the Nasdaq, it keeps going up, it keeps rising, it just keeps climbing. We broke the record, the annual record, about an hour ago, and now we're heading back to it. At first glance, look at the opposite, the Dow Jones. Yesterday, it went back to the middle of its range. We had the Nasdaq and S&P 500 going up and the Dow Jones going down. Here, we have a sectoral rebalancing. Let's say the last week has been quite favorable for the Dow Jones. Now, apparently money is being pulled out of the Dow Jones to invest in the Nasdaq. We have Tesla's results, we have Facebook's results. Apparently, they're quite enthusiastic. So if you're in the US indices, be careful. Just because the Nasdaq is rising, the S&P 500 is going up, we have the Dow Jones in the red, so be cautious with the Dow Jones. I'll quickly go over the S&P 500, which is in exactly the same setup as the Nasdaq. It's the little brother copying its big brother. Let me remind you that in the S&P 500, you have stocks, some of the same stocks as the Nasdaq, including Apple, for example. So if the S&P 500 goes up 1.5%, for example, the Nasdaq has gone up 2.5%. And when the S&P 500 loses 1%, the Nasdaq has lost 2%. So they're extremely correlated. If you find the volatility and the swings are too high on the Nasdaq, take the S&P 500. I'm just talking to you about the swings, not about the way to trade, scalping, or training. That's something else. That's up to you. Take the S&P 500. Let's say it's like the Nasdaq's little brother, a mini Nasdaq, just a bit less wild. Let's say the Nasdaq runs on heroin and the S&P 500 runs on cocaine. Assuming, of course, that heroin is more stimulating than cocaine. Honestly, I have no idea. I've never tried either. But I imagine there are some experts out there. And then let's say the Dow Jones runs on, that stuff, weed. I think it's called, there's another name for it, I think. Cannabis, that's it. I've never tried that either, but I think it slows you down a bit. So there you go. So if you don't want to be on heroin, switch to cocaine. If you don't want cocaine, move on to cannabis, of course. I'm talking about stock market indices here. This is not an encouragement to use drugs. Far from it. Above all, remain free men. And so to stay free, don't do drugs. That seems obvious. Let's go. All right, let's brace ourselves for a bit of a blow to morale. The KC 40, well, there you have it. This is what we call a range. If you don't know what a range is, it's hopeless. Here it is. Monthly pivot point, I'm stuck on it. While the indices, especially the Nasdaq, just keep going up, we're stuck on it. We haven't moved since the beginning of December. You might say that's already not so bad. We're not losing money on the CAC 40. That's already almost miraculous. Actually, I shouldn't use that word. Miracles are for something important. Here, it's for something useless. So the CAC 40 is now pointless. Let's be clear. When you see the trading volumes on it, it's sad. It's sad. So, well, there you go. We're in that mode. Depression DAX. It's trying to bounce back. It's trying to bounce back. I won't blame it because at least it's still trying. There's a bit of energy there. Still, it's nothing to write home about. Let's go play a bit with the Nasdaq. Look, things are immediately better. So this is Nasdaq 1. It's exploding. It's taking off. For 20 years, no one made money on gold between 1980, I think, at the ISI, and 2000 or 2010, or for 30 years, the price didn't move. If you had bought in 1980, in 2010, or in 2020, you would have ended up with about the same curve minus inflation. And so you were flat, and then the explosion, an incredible explosion thanks to uncertainty, thanks to Donald Trump, and then our so-called safe haven, which is not a haven at all. The beacon, which remains stuck, but stuck on its pivot, on its monthly pivot. You see, for now, it just can't manage to break through it at all. And if it breaks through, it would still have to get past the 90,000 mark, which could act as a barrier. So there you have it. There isn't much flow on Bitcoin right now. Careful, if it keeps going like this, look at the price over 2 months. It looks like the CAC 40, so let's not turn BIT into the CAC 40. That would be a bit sad, honestly. Alright, I'm done telling my nonsense, so don't forget. It would be really great if you could like this show, follow it, and talk about it to people around you. That's the only advertising. I don't advertise on social media, on Facebook or whatever, to promote the channel. So, well, I'm counting on you. That's why it's not very well known. Actually, so, get moving. You a friend? Tell a friend about it. That alone would already be amazing. With that, I send you my best. See you tomorrow, and I'll switch over in 3 minutes and 27 seconds. That's just a little detail for people from my school for the Good Morning Trading Premium. And if you want to join my school, now is the time. And if you want to attend the seminars, I'll make a short video to talk about the seminars. In July 2026, take advantage of it. I'm going from 4 weeks of seminars to 2 weeks of seminars, so there are already half as many spots available. Seminars really wear me out, so I've decided to cut it down to 2. And these will be the last seminars in Europe, because starting in 2027, 2028, and 2029, I'll be holding the seminars in Canada and the United States of America. And in 2030, if all goes well, I'll be doing them in Japan, so 2026 is your last chance. Right now, you have 6 months. 6 months left to attend seminars in Europe. Otherwise, you'll have to buy a plane ticket and come see me in Montreal, Quebec, Chicago, New York, Miami, or Los Angeles. That's what I've planned for the next 3 years. And then after that, we'll move on to Tokyo, hoping that in 4 years the translations will be 5,000 euros. I'll get myself a real-time translator. But that's it. Europe is over. It's over. I can't take it anymore, and I'm even cutting the offer in half, so I'm not raising the prices. I want to make it clear, I'm not asking for higher prices. I've been doing this for 4 years. We've had 20 to 25% inflation. I didn't raise the prices. I even raised the level of quality at the restaurants. Can't change who I am. And here's the result, 115 kilograms. I'll tell you more about it. With that, I send you my love. Take care. Don't eat too much. That's advice for myself. Big hugs. See you tomorrow for Good Morning Trading, and now in less than 2 minutes for the day at my school. Ciao, everyone.